So when we look at different types of taxes in this class, we're predominantly looking at 4 specific types. The first is the income tax. This is just a portion of your income, often a percentage. So people with higher incomes are going to pay more money overall. The next is the sales tax. The sales tax is a tax on every purchase that you make. So every time you go into a store, if you ever try to buy something for 99 cents, when you ring it up, it ends up being $1.08 or something like that, right? That's the sales tax being added on. Now, Washington has a sales tax, but Oregon, for example, doesn't have a sales tax. So if you go to Oregon, you'll pay slightly less for things because you won't have to pay that sales tax on top. Now, they do have an income tax in that state. The reason we don't have a sales tax, or we have a sales tax is because we don't have an income tax. A property tax is a tax on, yes, your property and your land, but property also refers to just anything you have that's valuable. The most valuable things that most people own is a house or a car or things like that. So a property tax is something that is assessing a tax on property. Now, in Seattle and Washington State, we rely a lot on property taxes because we don't have an income tax. People in Seattle often complain that property taxes here are very high. Now, part of that is because the housing costs are very high. So the value of houses are high, and thus the taxes on them, the property taxes, are also high. The final one is called a B&O tax. This is a business and, I believe, organization, but I actually don't know. B&O taxes are taxes on businesses. So this come in different forms. You could tax a business for how many employees they have, for how much output they produce, for how many materials they use, but any sort of tax on a business is generally a B&O tax. Now, when we examine the difference on the left here between the breakdown of the overall tax income for the United States as a whole compared to on the right here, Washington State, you'll notice one big difference is that United States collects an individual income tax and an income tax on corporations, whereas Washington State doesn't. So you'll see that we make up for our lack of individual income tax in Washington State by just having more sales tax. When we look at the tax revenue for the city of Seattle, we see that it falls predominantly into these 4 major categories. There are taxes on utilities, which is standard for most cities, a retail sales tax, also standard for most major cities, a business tax, again, standard for most cities, and a general property tax. If there was an income tax, we'd likely see these 2 reduced. But again, we can't have an income tax in Washington State because it's outlawed in the state constitution. There have been efforts, in fact, one we'll be reading about a little bit later today, but overall, there have never been an income tax in Washington State. Now, all of these are just the other general sources of revenue for the city. You'll notice there are tiny taxes on various other things. This would include, for now, like the soda tax or any other kind of relatively insignificant taxes. There's also fees you pay when you get a driver's license or permits or those things, court fees, parking tickets. You also notice a levy here. Levies are when the city wants to raise more money for a very specific purpose. In this case, it was more funds for ambulance services and emergency services like that. So what they do is they ask the voters if they are willing to raise their taxes to provide this service. So a levy gets put on the ballot and people vote yes or no. And if it is approved, if more people vote yes, then they'll add that in and the city is able to raise slightly more tax revenue because people pay slightly more taxes. So this is another property tax. It can kind of be added into there, but it's differentiated here to point out that it's the levy for specific purposes. So now we'll be looking at who in Washington State is most impacted by taxes. Is it wealthier people or is it poorer people?